The content discussed in this podcast is for informational and educational purposes only and should not be construed as financial or mortgage advice. Always consult with a licensed professional before making any decisions regarding mortgages or financial matters.
Welcome to the Canadian Mortgage Show. Here are mortgage professionals Alex Pang and Alex Shanks to cut through the BS and educate Canadians on all things mortgages and real estate.
Welcome to another episode of the Canadian Mortgage Show. This is episode 41. Alex Pang here alongside my co-host Alex Shanks. Alex, you're looking a lot better this week. I don't see any redness in your face or anything like that.
No, I'm pretty good. I mean, it's my neck has got a little bit more of a tan that way, and so I'm look good. How's your skin feeling from the burns?
Yeah, it's taken a full week for my face to get better. My goodness, like when I get sunburned or I guess my face breaks out, my face gets all like rough and it feels kind of hivey. Like you can tell it's off, and it's like, and I was getting not to get grossed out here, but get a lot of whiteheads everywhere, and I had to exfoliate like every day and use soft cleanser and moisturizer and everything. And only now, when you're feeling like your skin is getting back to normal, I can get back into a regular routine and such. So, folks, when you're getting older, man, sun is great, but man, sun is murder on your skin. So, yeah,
Oh yeah, no, I had actually. That makes me remember. I'm going golfing tomorrow, Alex. So I better remember to bring some sunscreen. I got to put that.
You know what? Funny enough, I'm going golfing tomorrow too, but it's a par 3, so we're not going to be out. But thankfully, this heat wave that we were having this past week I think the high is only going to be 17. But we learned our lesson. We're still going to wear sunscreen, right, Alex?
Yeah, that's right. I mean, I start at 8:09 tomorrow morning, so it's hoping to be done decent amount, but I'm doing full 18. We'll see how it goes.
Yeah. We're doing a full 18. We're doing it at 1:00, but still, we got to wear sunscreen and hydrate and sunglasses and all that stuff. So, yeah, we got a busy show. Do you want to lead us off?
Yeah, let's go into it. I mean, this is just kind of what we've been seeing, that we got the jobs report, and Canada has added up to 8,800 jobs for May. So a big amount of jobs being added. And what we see here is they've added 58,000 full-time, and there was 49,000 part-time jobs lost. Now, again, these numbers, people, these are estimates. The numbers the full true numbers don't come until a month later. And that's where, like, I don't even know why we give these numbers out from the government sometimes. It's like, why don't we wait till we have like the true data? What's the reason of even giving, hey, these are our estimated numbers? The scary thing here is unemployment is rising. It's now at 7%. And this is the highest since 2016, not excluding the pandemic, because that is kind of an outlier that way.
Mm-hmm. Yeah, I know, like this report here. Manufacturing and transport has been hit hard by the tariffs. No surprise there. Now, here is a wild stat. Remember, I was talking about youth unemployment were at all-time highs at 14% or 15% maybe a couple of months ago. It's hit 20% now. My goodness. Like this is probably a direct relation to the mass immigration that we have with temporary foreign workers, new immigrants taking up those skilled jobs. And like, sorry to beat a dead horse here, but my son and all his friends, they haven't had a hard time finding a job. Like, sending out 50 resumes or applications and radio silent, right? So, how is that going to improve?
Yeah, and I mean, one thing I saw, I think it was even today, like wages are growing. I mean, it looks like BC's the minimum wage has increased. I mean, I think it's at $17.50 now. I remember, what was the first job that you ever did, Alex? What was your starting hourly rate?
When I started working in 1994, I was grade 10. Minimum wage was $5.50. Yeah, and then when I got a 50-cent raise, I was like, "Whoa, I'm rich!" And I was making $6.50 an hour. That's amazing. And then, yeah.
That's so crazy. I remember, yeah, I think my first job was $8 an hour is what I made working at a mountain. Then my second job was at Staples, and I was $10 an hour. And I was like, holy shit! Like if I work 10 hours, I can make $100. And but I do remember, like I would either pack my lunch or I would go to Walmart and I would get like canned soup. and that's all I would eat. Then everyone else there, they were getting like McDonald's and all these other things. They're always like, Alex, how do you have money left over? I'm like, well, I'm not spending all my money on fast food.
Yeah, I mean, even when I got into like hospitality, I got into restaurants, and I started off as a busboy, still making your minimum wage. At the time, I guess it was $6 or $7 an hour, but with the tips, I was making like $15 an hour. I'm like, oh dang, I'm freaking rich compared to all my friends and such. So I'm like, you know, then I worked my way up to server, and I'm like, whoa, I'm rolling here. And then of course they don't teach you financial literacy during school, and you spend it as fast as you make it, going out partying, drinking, and eating out. And like, I think my son's going through the same thing now, is fixing up his car, putting stereo and lowering it, putting rims and all that stuff.
Yeah, I spend it all there, and that's where I mean, it's just it's sad and it's scary. Like, I mean, for your son, hard getting a job for him and everyone else. And I mean, how are they going to learn how to do other stuff in life? And like, hey, maybe they want to take the summer off, but like they can't even get a job if they're trying. Like that's a scary thing.
Yeah, my youngest, he's in grade 10, going to grade 11. He's applying for the P&E. And I remember my wife and I growing up, we applied to P&E. It was like a huge job fair. And I honestly just wanted to be a sweeper. And just like, and I couldn't even get in. My wife couldn't get in either. It was like the big thing, like, hey, just work for 2 weeks or just work at Playland and meet a lot of friends. And a lot of times when you're young, like, hey, meet girls, meet boys, and all that stuff, right? Couldn't get in. I'm like, why is it so hard? So he's applying. We'll see. We'll see where it ends up. So yeah, to my youngest, good luck. We are hoping for you. It's going to be a far drive. We know we're probably going to drive you, but you need to get started somehow. So all the luck to him there.
And that's what my parents. That's what my parents did. My first job, I was 15 and I was working at the mountain, and I worked Thursday nights, Friday nights, and Saturday nights. And they would drive me to the bottom of the mountain. I'd catch a bus. And I mean, they probably, if I had to pay them, they probably would have lost money, the amount of driving they had to do.
Oh yeah, I remember my first like job that wasn't new, like a paper route. I worked at Bread Garden, and I worked a 6 a.m. to 2 shift, 6 a.m. to 2:30, I think. My dad drove me at 5:30 in the morning. Now I think back, wow, that was pretty awesome of my dad, like to do that. Like, not, I think it was maybe every day in the summer, but like on the weekends it would be Saturday, Sunday, and or Friday, yeah, Saturday, Sunday, and then I would take the bus home from, like, I bus to downtown, and then through downtown, take another bus home. But yeah, those were the days. But yeah, if my son gets into P&E, I'm like, yeah, we're probably gonna have to drive. So it's one of those things. Yeah. So here's an interesting story. Like, if we move on here, we've always kind of been pro landlords because Alex and I, we are homeowners and we're also landlords. But the province we live in, BC, and as well for our audience, Ontario, they're not landlord friendly provinces. There's rent control. We understand that. And there's, we've debated on end about, is rent control working? Here's a crazy story about tenants who are taking advantage of the system. So we call them professional tenants. Okay. Now, so here's a CTV story in Ontario where professional tenants, a couple of cases here, owing $25,000 and $45,000 to two separate landlords for non-payment of rent. So for those of you who know what professional tenant is, you probably know this, but I'll go through the story here. So landlords have taken the tenants to the LTB, which is the Land Tenancy Tribunal, due to delays, because with any government entity, there's always delays. Oftentimes it could be 3 to 6 months before you get a hearing. Now, during that time, tenants are still staying in your suite or your unit and continuing to not pay rent. So the amount that they're owing you still keeps stacking up. And as a owner landlord, you can't do anything about it. So these tenants know the system and loopholes and will stay in the home rent-free for as long as possible. So they know that eventually they'll leave, but they're going to milk the system for all it's worth. It could end up being like 6 months or 12 months or how long till they eventually are evicted. Now, again, like I said, this is a major problem in Ontario and BC because we're not rent friendly, landlord friendly provinces. Only Alberta is it landlord friendly, and so I'd be interested to hear like like if there's any stories like this in Alberta or on the other side, like has a bit.
There is, like, in every province. I have lots of investor clients and on board and stuff, and there is still the bad people that are still doing bad things, but it's just easier to get people out for one, and it's less of a rigmarole, and also you can increase rents. Like, it's not in BC and Ontario, you're capped by whatever the province sets. And I mean, hey, that I do find, I'll go back to like when we know that variable rates went up, everyone was really hurting. I personally do not believe everyone should have just been able to increase their rents by what their mortgage went up, because it's like, hey, you took an investment, it had risk to it. And so, but when you're talking about other life expenses, like, hey, property taxes have gone up 10%, insurance has gone up 10%, but hey, your rent can only go up 2%. That's where those numbers don't make sense to me. In Alberta, it doesn't work that way. You can say, hey, we're increasing the rent from $1,500 to $1,800. Either take it or leave it.
Yeah, and it's essentially letting the free market work itself out. Now, if you jack it up 1,800 to 1,800 in your scenario, and they leave, and you find that you can't re-rent it out for 1,800, well, the market's telling you you should not have jacked it up to 1,800, and you'll learn the hard way, right? And then you'll like, okay, I think I need to lower it to 17 or 16 to re-rent it out. So that'll correct itself. That's why we have, because of this rent control thing, we have a housing crisis in BC and Ontario. I mean, we know a lot of owners aren't willing to even take the risk of renting out their suite because of these stories. Now, these stories are probably few and far between, but it just takes these rotten apples to ruin it for the rest of everyone and scare people.
I talk to so many people, and it's talking to so many people of like, people are like, oh, I'm just gonna buy a townhouse, and I mean, where I live, you can buy a house with a detached suite for 850. We know where you live, Alex, that's not possible. But the difference for someone, let's pretend, hey, they bought a townhouse at 700,000, they get it to themselves, they have strata fees. The monthly cost, if they bought a house with a rent with a suite in it, and even if they only got $1,000 a month in rent, they would be saving so much money. It's significant, and that's where, if people had more power, they'd be less scared. But the news puts all the fear in the renters. I always have to go over to people like, hey, I've been renting since I've been 19 years old. The worst I've ever had is someone broke a laundry machine. Hey, I took the deposit, but I'm very aggressive on my, when I'm reviewing renters. I don't care if you offer me $3,000 and the market says 2,500. I want to know, are you actually going to be a good renter? You can't just try and buy me by what you're going to pay. I need to see your pay stubs. I need to see your credit. And that's where people go wrong. They just try and get the most expensive rent. And those are the people that catch these issues right here.
Yeah, yeah. So, I'm going to get to it, but, like I've mentioned this before where, both Alex and I are in kind of in the industry where we underwrite files. So we kind of do the employment checks, the credit checks. And I've personally taken that to I guess my home too, when I'm renting out the suite. I've taken it a little further with, I creep those people on social media and I check out their LinkedIn profile. Do they have a LinkedIn profile that says that they work at that job, or the reference that they give, is their boss actually working for that company?
Oh, and I'm not calling the references. I want to find the company, and I'm calling somebody else.
Correct. I'm not calling the cell phone number that they give, could easily be a fake number or their friend's number. I call the landline of that company, and I see that, hey, on their website, or on the LinkedIn, this person is working there, and then same thing for tenants as well, like um, landlord references as well. So here's another kind of a tool in the toolkit that landlords could use. This website called OpenRoom.ca. It's a crowdsourced platform of court orders, so landlords can check the history of prospective tenants. So I get it that this is probably, um, it would require other landlords to upload court orders to. It's kind of like a shared thing. So let's let's share this to the community so that it doesn't affect other people.
Now the only thing is, I don't know if you're legally allowed to do that in some cases. Like unless the court, like I don't think you can put like some of that information up there. Like you can't, like legally you're not allowed to talk bad about renters on like a Facebook group. Like they could sue you for what I mean. Yeah, yeah, that's where I mean. It has to be. That's where it has to be public record that way. But like, depending on what it looks, that's where it just those are. I just know like certain things you can't tell. Like, hey, this person's a really bad renter. You can't say that, and so that's where as long as it's court order and it's a public record one, I don't think it'd be an issue. But other ones, like you can't say stuff, which is to me kind of crazy.
Yeah, so I know in BC, I use a website basically. I think it's almost like the Justice Institute or one of their searches, where I do check for criminal, like if there's any like outstanding things, and it's locally in BC. So it may not be the end all and be all, but if sometimes things have come up where I see, oh, they have a traffic ticket for speeding or whatever, and all those, those things I don't care about because a lot of us all speed, right? Um, but like those big things that come up, um, and this, I've said this before, but landlords, most of the problems can be prevented with proper screening up front. And that's what Alex and I have done. Pay stub, job letter, credit check, reference checks. OpenRoom.ca could be added to your due diligence. So these things can be prevented. And what this tells me is like these stories of these tenants that are non-payment rent is because landlords have skipped it and and just found anybody, and that's where problems can come about.
Yeah, that's where I'd much rather have lower rent or a place not rented out. I'm not just going to take the first person that comes in and everything, and that's where it's going over that. And the big one, it's income. And everyone always says, "Why can't I get a mortgage? I can pay this $3,000. I'm paying more rent. Someone can take if their rent is $3,000 and their income is 3,000. They can do that if they wanted to. Now maybe they're living on credit cards and everything. You can't do that on a mortgage. I want to know for one, just for my own well-being, that I'm not ruining a person's life on that, is how much income are they spending on this rent. And that's where I had one person at a higher end rental. She told me like, oh, I'm only spending 30% of my rental income. I'm like, oh, that's like, okay, you must make really good income. Got her pay stub. I did the math. I'm like, hey, I think the numbers were wrong. Like it's like 70%. Oh, I did the math backwards. It's like, yeah, you're not getting this place.
Yeah, exactly. Like just as you're saying about why is it easier to get into a 3,000 a month rental versus paying 2,000 a month? It's because getting a mortgage is hard. It's we need to go through credit checks, like all those due diligence. Like we said, we have these debt ratios that we need to follow. Whereas a lot of times when you're renting out a place, if the landlord doesn't do their due diligence, they just kind of look at, you're interested, you're in. That's the kind of thing. Whereas this is kind of like a public service announcement to landlords out there. If you're renting it out, do the due diligence because you want to avoid a headache. So you want to screen properly up front. It's better to miss a month of rent to find the right person than to fill it quickly with the wrong person, because it's so hard to get them out. For those of us in Ontario and BC, it's hard to get bad renters out once they're in. So it's better just have that proper screening in place, to make sure you get the right ones in.
And that's what I mean. There's like there's mortgage fraud out there where people will make fake income documents and everything. It's very prevalent in Ontario. There's fake people that you can get renters to set up like jobs, incomes, websites for where they work. Like it is like a full on scheme thing over there for people to get rentals even. And I mean, in Ontario, in Toronto, like specifically, like they have like a full on rental market that realtors, all they're doing is dealing with rentals. That doesn't really happen here, like a little bit in Vancouver, but like there's realtors that all they do is rentals. They don't even sell properties or buy properties. They just help manage rentals, getting people in and out on leases. And that's where I've seen videos before of like, I remember watching this one realtor. He's like, track this person, looked at their income, was something a little bit weird, went to the website, looked at the back end of the website. It was just built a week ago. And like he found this like crazy thing. It's like this person, like it was completely fake. The person did not have that job, did not have anything, and they were using it to try and get into a high-end rental.
Wow. Okay, so if it wasn't for that realtor to know or have a hookup to checking a back end of a website, then it would have fooled anybody.
Exactly. Well, they like that was they were doing phone calls and everything, and like there was other stuff too. But it was just yeah, it was very interesting. Like of just the levels that people go to for these things.
Yeah, yeah. You actually touched on another thing I want to talk about is mortgage fraud. So this is probably like more than 6 months ago now. Um, the government was putting out a survey in our industry about our thoughts about the CRA income verification tool, and this is probably a while ago now, right? Probably September, October, something like that. Uh, Sometime last year. We have not heard a darn thing about it since. So has it been put in the back burner, or are they just gonna like it's just not gonna happen? Like Ron Butler has been pretty adamant on this, and I have to give him, credit for, spearheading this. But yeah, we haven't heard anything from it at all from the government.
It is the easiest thing, and we've also, I don't know if you saw, we have one lender, Scotia, in our channel. There said that we will not accept T4s from the government. It has to be like the original T4s now. The way that it gets printed from the government website, when you print it, it doesn't show your freaking name. You have to I have to tell someone, hey, you're going to take a screenshot of your entire screen so I can see your name in it. It's just like, how asinine is that? Like, hey, we have these robust systems that we've built, spent millions of dollars on, but hey, when you print that PDF button, hey, it's not going to show your name.
Yeah, that's one of the big pet peeve is uh, clients printing like T4s from CRA, which doesn't show their name. I'm like, yeah, yeah, like, yes, it's the T4, but please send me the original employer one because it has your name on it because the government one doesn't have it. So,
And then even NOAs, there's three different ways to get your notice of assessment. There's one that's an HTML version. Lenders don't like that because it's the easiest thing to do mortgage fraud. Either they want the original copy or they have to get the one that gets mailed into your CRA account. But like a client just knows like, hey, I'm going to go to my CRA account and I'm going to get my notice assessment. Oh, that's the wrong one. Like it's such a stupid way where back in the day, I used to pay for like, I think, well, I can't remember what it was called. I paid like $80 a month, but so I could just pull people's data. I could just, boom, I want your tax information. I get everything right now.
yeah, I think that company's called Snap NOA.
And yeah, I used to pay them and it was awesome. And it was so smooth for the clients. And I knew where the documents were coming from. There was like no worry of like, are these true documents? Is there something wrong with them?
Yeah, I don't know what the whole legality of it now is. They kind of removed it, or CARA is not allowing us to use that anymore. So it is what it is. It is what it is.
Well, this is a big one on the mortgage side here, and this is some stock talk that's been happening for a while. But OSFI, our financing regulator here, this is something that they've been talking about is considering replacing the mortgage stress test with the income-based lending cap. And what we mean, the stress test as of today is either 5.25% or the contract rate plus 2%. That's what the stress test is. Now, what they're talking about is it going to be a 4.5, a 5 times your income? That's what they're kind of looking at doing. It's something that we had like when remember that first time homebuyer incentive program, Alex, that the government came out with? I think like 80,000 people used it in total. That had a lending cap on it. You could only use 4.5 times your income, and it was the worst program in the world.
Yeah, I had no client that took the government up on their offer because you're essentially giving the government a piece of their equity. And I told people, you know what? If you have the money, better off don't do it.
It doesn't. It all it's saved. I think a lot. Every time people ask about, it, they're like, "Oh well, I'm going to get that 10% down, so I can put it 20%." It's like, no, no, no. This is only for insured mortgages. They're only doing it that way, and all it did was help reduce your monthly payment. That was the only thing it did. It's like this does not help you in any way.
Yeah, yeah, exactly. So, I mean, still talk. I mean, they were considering it last year. There's, it's come up again. So I hear that there's.
I do know the banks have internally, they already have been adjusting this like on their books. Like that's where like we used to have, like we have net worth lending programs where you can use your net worth. If you have $1 million in the bank, you can lend dollar for dollar. Now, some lenders now have to have an income cap on that. Back in the day, you could make $10,000 and they would let us use it, where some lenders now need 50,000 in income. And for what I've been told, it's they're changing their buckets. Every lender has certain buckets for, hey, this is above our 4.5 lending cap. This one's below it. They have different risk assessments that way. And so internally that they're already actually doing some of these things.
Yeah, yeah. So I mean, is this going to improve affordability, or is it basically more of the same? It's just kind of differently assessed.
It's the exact same for that. Where I can see it really becoming an issue, it's going to become investors, people that have multiple rental like real estate. That is where I can see this becoming a really big issue.
Like it's going to hurt them. Like it won't be as
It's going to hurt them. It's going to hurt them for qualifying. And so like that's what people may be stuck at their lender and they may never be able to move now.
Yeah, it's almost like ever since the whole like rates rising like crazy and government changes, I think they're realizing that they want to disincentivize real estate as a investment vehicle. I think most places in the world it's not like this. I think but Canada, somehow we love our real estate, and just
I mean, in the U.S., it is like an investment there too, but it's in a more of a, hey, buy a place, fix it up. Maybe you can build some sweat equity, or hey, you're doing as a rental. It's not, hey, buy a place. A year later, it's worth $100,000 more.
yeah, and you do nothing, and it's based on pure speculation and capital appreciation. Um, so this date has already passed, but this is about 4 days ago now. June 8th was Tax Freedom Day, according to the Fraser Institute. So,
I thought when I read that, Alex, I thought you were going to pay my taxes for me. I thought that was cool.
geez. Alex makes too much money. I can't afford it. I'd have to work 2 years to pay that. Now, so the thing is, if Canadians paid all their taxes up front, they'd work the first 158 days of 2025 just to cover the bill before bringing any home from themselves. So that 158 is just less than 50%, isn't it? What does the math work out to? Let me just let me do the math. What's 158 divided by 365?
364 is divided by 2 is 182. And so it's just under half.
Yeah, so 43%. That's how much we're taxed in Canada. I'm like, man, that's sad. So yeah, we have a graph up here that we will throw up on the video side. Like, yeah, basically, first half of the year up until the first week of June is all taxes, and then the rest, that you make for yourself.
Yeah, and I mean, again, this is where when you're an employee, you're putting a lot more to taxes. As a business owner, you have some better flexibility that way. Now, the only thing, everyone that ever I find that becomes a new business owner, I remember the first time when I used to be an employee working, I'd pay all my taxes, I would get money back. I remember the first time I started as a self-employed person, and I made much more money than I'd ever made before. I got my tax bill and I'm like, what do you mean I owe money? Luckily, I had put money aside, but when you're a business owner, you're not just paying, the taxes aren't coming off your paychecks. You actually have to put the money away. And that is where a lot of people get in trouble. They're like, oh, look at this. I made 150,000. They forget they have to pay taxes on that 150,000.
Yeah. So, self-employed, make sure you put away, like, I don't know what your tax bracket is, but put away at least 20% for taxes or something like that, just to have a separate account.
Yeah, I tell my wife, even like I remember, she's like, "Oh, my tax bracket's not going to be that high." I'm like, "Do 30%." Like I tell people at minimum 30%, and if you think you're going to be above that, you need to do 40%. You need to do 50%. Now that's as a sole proprietor. When you're a company, it gets super powerful. You can say, "Hey, I only want to pay myself 50,000 from the company." You can leave everything inside of it. In a company, on the first 500,000, you're only paying 11% in taxes, and so that is why there's very big power having your own company.
Yes. Yeah, but for those who are incorporated, you got to have that balance too, because if you don't pay yourself enough, there's only a limited amount of income we can use from your incorporated business if you're looking to borrow money. So it's always kind of like an inverse relationship. Like, yeah, I write down my income to like 20 grand, that's great. I don't have to pay much taxes. When it comes to borrowing money, oh my goodness, the bank will only lend you based on that 20,000 income, like net income. So whether you're sole proprietor or incorporated, plan for like future, especially like if you plan on borrowing money for like any investments like real estate or stocks or whatever. um, uh, they look at, banks look at your income, personal income.
Yeah, that's right. You need to plan 2 years in ahead of like we're looking like right now we're looking at people's income for 2024 and 2023. Self-employed, we actually can still look at 2023 and 2022 because you don't have to file your tax until what, June? I think today was today the last day to file taxes. Actually, I think.
Yeah, I'm not sure. I thought it was till the end of this month, but I wasn't sure.
Yeah, I can't remember. I mean, I got my end at the end of May there, but we are still a self-employed. When Alex and I get to look at the mortgage stuff, we can look at 2023 and 2022 income right now, and that's where there is specific planning that a mortgage broker needs to do with an accountant to say, hey, how do we actually save the most amount of money in taxes?
We got to move on. Okay, so next up here, the average rent in Canada, it fell 3.3% year over year in May to 2129. So, $2,129. So that makes it the eighth straight annual decline. This is per rentals.ca. But still, rents remain 5.7% higher than it was 2 years ago and 12.6% above 3 years ago. So, yes, it's great. Rents are coming down, but it's still higher than it was pandemic, because during the pandemic it just shot up. So like this is kind of good news ish a little bit.
I do find like I don't see as many videos anymore, Alex. Remember, I mean, back in the day, it was real estate only goes up, never goes down. Then there was videos of, hey, well, real estate like might go down, but rent never goes down. Buy a real estate, and it's like I always just find that people there's always downside and upside in everything. There is not a sure thing in any investment, and that's where when I look at new investment properties, I'm not taking the today's market rent. That is not what I'm using as my buffer. I'm going back 2 or 3 years to say, hey, what was it like back then?
Yeah, exactly. So no, it is good news there. Do you want to talk about the next thing? There was an app that we used during COVID.
I don't know if I ever actually used it, to be honest. I don't know if it ever let me into it, but we can talk about the Arrive scam, the ArriveCan app. This is, I mean, again, I beat my head against a wall here sometimes, thinking like I don't understand how the government and stuff can do these things, and there's just no trouble. Well, this company here, what has happened to them is they've been banned from receiving any government contracts for 7 years. That's all they've been banned for, 7 years. It's pretty much just saying, hey, you know what? You're not going to get free money again for 7 years. And they get to keep the $40 million that they took for two people. And I mean, like that just, to me, it's just, yeah, it's craziness.
Yeah, I mean, that company is banned. So the company is called GC Strategies. I mean, can't you just start a new company?
I would hope it's the people tied to the company is what I would hope it is. Like I would hope it's the two guys that they're banned from doing it. And I mean, all the news that's come from us is like they were like not even the right people for the job. There was better people that should have been suited for what it was done, like for how they got the contracts and stuff. Like it's so dirty that it makes me get scared and be like, well, what is our government actually doing?
Yeah, I mean, like, why 7 years? Is it kind of like the whole bankruptcy thing where it's off that means in theory they can start a new company or the existing company and they could start getting contracts again in 7 years and start, scamming the government. Um, yeah, I mean, this goes on. I mean, the Auditor General of Canada says, this has included the ArriveCan. There's massive incompetence and corruption in federal government's procurement services, which means this like the checks and balances required to give out these contracts to make sure the money we're spending is actually fruitful and what is it going towards? Like, why is it costing this? All that. And she said here, what we found here is that public servants were not applying procurement rules. I have no reason to believe that it's unique to two vendors, including GC Strategies. we found issues in almost every contract we looked at.
Like, that's just like, who is the person that's approving those? Like, that person should like instantly be like, hey, you are fired. On here, are you going to jail? Like, how can that, let's say that they weren't even trying to do anything wrong. Like, they weren't even trying to rip us off. I mean, for one, to be that bad at your job consecutively.
Yeah. So, I mean, anybody going to jail? I mean, we get overtaxed for massive amounts of waste in the public sector. And, you know, I'm hearing even on social too, like, I don't even know if this is true or not. Like, Justin Trudeau should be like charged or something for like this, you know, corruption and money laundering or whatever this is. So just, it just makes me shake my head.
Nothing's gonna happen. Is the thing is, okay, they've been banned for 7 years, and it's once you have that type of money and you're able to do those things, these things don't really become an issue, and that's the sad truth of it. And I wish we were able to hold people more accountable that way.
Yeah. You know, our agenda is quite long. I don't think we can get to it. I do want to jump into this case scenario before we wrap up our episode. We'll save the rest. Our agenda is like 8 pages long. We probably only got through 2 or 3 pages of it, or not even 2 pages of it, for you folks. So we'll talk about it next time, folks. But there's one case scenario that I do want to talk about. Last week I talked about downsizing. Like, you know, right now, I'm going to paint the picture for you. So, you know, we're in a tough market right now, whether it be, you know, mainly in BC and Ontario, Lower Mainland and the GTA, where properties aren't selling, whether it be condos, townhouses, or even single detached. And the only way that people are selling is you got to discount your property. And oftentimes properties are discounted maybe like, geez, 15 or 20% from the peak from COVID. And, you know, there may be some disconnect between expectation and reality. And not many sellers want to do that. So last week we talked about how downsizing, where we can use a reverse mortgage to bridge the gap, allow them to buy at a discount, save that property for, you know, for a year or two, rent it out in the meantime, and then, you know, maximize the purchase and the sale. So what about upsizers? Any strategy to help? So here's one. There's a strategy to help out upsizers too. If oftentimes you're living in a condo, you want to upgrade to a townhouse or a house. So you have to sell your condo in order to make that happen. Unfortunately, the condo market is crap, right? It's not good. Like, even if you discount it 10%, like, man, the inventory is flooded. You're competing with like 30 other comparables, and you're going to have to sell it for like pennies on the dollar, and like, good luck selling. So, and we know on the buy side, there's discounts. You want to get that townhouse that used to be $1 million, but now you probably can get it for $850, right? So here's the strategy. If you have enough equity into it, refinance the mortgage on your condo. If there's enough equity, you can take it out from a refinance, use those funds as a down payment for the next property. Turn your existing condo into a rental, and you get to buy that townhouse or a house at a discount. Now, the numbers need to make sense. You need to have enough equity to give you enough funds for the down payment for the buy. And you also need to be able to qualify for the mortgage on the next place while having your first property as a rental property. But if that works, this is kind of like the downsizing situation. This will help remove the glut. Like, we were talking about this pre-record. This is almost like, right now the market is almost like gridlock in rush hour traffic. Like, there's a whole lot of listings, but nothing's moving. So these strategies, the downsizing last week and the upsizing this week, is taking equity out of the existing property, using it to buy, and keeping that other property, renting it out in the meantime, and sell it in a year or two when the market's better and you can be at a price on it. So
yeah, that's the only thing that I would add to it. It's helping plan the rights. Like, should it be in a home equity line of credit, the new funds, like making sure that we put someone in the right spot. Because let's say you did it, you lock yourself into a 5-year fix because you're trying to find that lowest interest rate. A year later, you're like, all right, I'm ready to sell my place. And then you're like, holy shit, I just got hit with a $50,000 penalty. And those are the things that need to be looked at for people is, hey, should you just take it as a HELOC? Maybe you have a lower rate right now and you don't want to fully break the mortgage. Depending on your lender, you might be able to go back to them, or you might be able to just get a line of credit behind them. And that's where I find a lot of people don't think of those. They're just like, oh, I got to break the mortgage. I got to get this new thing. And it's like, well, shit, that just cost you a bunch of money.
Yeah, we can look at that and even look at usually when it comes to investment properties, I always tell my clients to consider the variable because you don't know how long you're going to own it for, right? It could be a year and it's only going to be a 3-month interest penalty when you do break it. Yeah, so we can look at those options too of whether to, break it and do a variable or get a HELOC on it, whatever the numbers it makes sense for you to do. But yeah, so obviously, the pros here is you're buying in a down market so that the home that you're upgrading to, that townhouse or the detached house, it's discounted heavily from the peak. And like you're able to hang on to your current home, rent it out in the meantime, and move up. So you're not stuck. So obviously it's not going to work for everybody. The numbers need to make sense. There needs to be enough equity in your property to make it happen. And you need to be able to qualify for the mortgage on the other place while having a mortgage on, your existing home as a rental. But if the numbers work, this is an option as well to maximize both the purchase and the sale.
Yeah, I've been doing a lot of these in a little bit more of a different way of like it is where we're fully refinancing their other places into a home equity line of credit, giving people the access so that they're able to go buy the other place and then they're going to sell their place once they have the offer. Where I live, we do still have multiple offers. Like the market for the right place can still go quite quickly, and that's where people need that flexibility of like, I need to be able to get this place where if it wasn't set up beforehand, the timing may not line up for a refinance and a purchase, and that's where it's you got to look at what's the plans for the future.
Yeah, exactly. So what I'm saying here is this scenario may not work for everybody, but in markets like the GTA and Lower Mainland where not much sales is happening and people can't move on to their next property until their place sells, here are options with the downsizing or the upsizing scenario where you can pull equity out of your existing places, turn to a rental, and then buy your next place in the meantime. And
the really cool thing is you may be able to look at it. You might even be able to do cash jamming and keep the condo and actually pay your mortgage off even faster. And that's the thing is when you start looking at it, you might be like, oh shit, I actually am able to keep this and I can buy my new place. And that's especially when people that bought like 2017, 2018, a lot of people have like lower mortgages and a lot of equity. They don't even realize the power they actually have right now.
Yeah, absolutely. So folks, yeah, I mean, here's a couple of strategies you guys can consider. If you have any questions about it, like again, don't just all of a sudden listen to me and all of a sudden do it. This is kind of like a little taste of what it is. If you want more details about it, send us a DM, send us an email, book a discovery call with either Alex or myself, and we'll talk about your situation to see it's even possible. Of course, we're going to have to go through a full pre-approval process to make sure the numbers work, if it works for you, whether it's the downsizing or the upsizing scenario. Yeah, you have any closing thoughts?
No, it's been myself. It's been a bit of a week. I'm kind of excited for the weekend. It's been I would say like in our industry, there's lots of ups and downs. There's great wins when you're winging, but when you're also losing, it's just down, down, down. I didn't lose anything today, but it was the first thing I did when I looked at my phone today. The first 3 emails were all like, oh shit, all right, let's get this day going now.
Yeah, a lot of times the public doesn't see what even realtors and us go through on a day-to-day basis. It feels like, hey, it's just easy. You guys are just, your jobs are easy and you're making so much. Like, you guys should not make as much. I'm like, it may seem like that, but we go through a lots of ups and downs. And, there are days where like our hair is on fire, where things are like busting at the seams. And these are completely out of our control, whether we can't get an appraisal in time because we can't get access. And because of that, we have to delay closing. And then the lawyer hasn't received the instructions yet because the bank is taking forever reviewing documents and signing off on all these things. And, like these are out of our control, but we have to push buttons and light fires in everybody and be like, listen, please, mark this file complete so you can instruct and all that stuff. So, I'm not trying to like complain here. This is a great business that we're in. And we get to help people make one of the most important purchases in their lives or the decisions in their lives.
That's really
yeah.
cool.
And
I had some really cool calls before this of helping people, first time home buyers and stuff. And like, that's start of the day bad, end of the day awesome. And I got to talk to you today as well, Alex.
Yeah. So, and at the same time, folks, you're working with a realtor mortgage broker. Show them some love because they do work hard for you. Like it does feel like sometimes that, we could be order takers, but we're not. We're here to serve you. We work hard. And so show them some love. So with that, let's just wrap this up. On behalf of my co-host, Alex Shanks, I'm Alex Pang. Thanks for tuning in to episode 41 of the Canadian Mortgage Show. We're 9 episodes away from 50, which is our 1-year anniversary. Imagine that, eh? Yeah, so we've been almost doing this a year, and this has been amazing. So, folks, thanks for tuning in. Again, if you like this episode, please share, like, and subscribe, and help us grow our following. All right, folks, we will see you next time.
Now, if you enjoyed this episode, make sure to like and subscribe. If you're listening on Spotify or Apple, make sure to follow us. Please give us a 5-star rating. You can even send us an email because we want to know what you guys want to hear about. That's what we're here for. Reach out anytime.